Georg Grodzki's here, Global Head of Credit Research for Legal and General Investment Management. Hi, Georg. Bit of a theme emerging, not just here, but in the US. Lower provisions, but trading revenue not so good. What can we take away from these themes?
Well, one
Georg?
thing we can definitely take away is that banks took the opportunity last year of bad results everywhere to, in a way, kitchen sink whatever they could, and being prudent, you could say, and providing as much as they can. So they reap the benefit of their maybe overcaution last year in a way. Number two is we can also detect that in the commercial banking world, interest margins are just stabilizing, which is very, very good because they have been on a declining path for quite some time. Banks are seemingly able to pass on the rising funding costs, which we just learned about, to their customers. Not good news for customers, obviously. As far as asset quality is concerned, we are becoming increasingly conscious of the slowdown which is taking hold in parts of the world. And the question is, will there be another rise in provisions next year if the US economy and maybe parts
We're talking
of
about the Spain and the islands here, yeah.
Well, not necessarily. I mean, the US is also possibly facing a slowdown, as we've just learned. Spain and Ireland clearly have issues still left to do in their housing market. The market doesn't quite believe that prices have dropped to a sustainable equilibrium level. Definitely true. And the commercial real estate market throughout Europe is also facing a big refinancing bulge, and we may see more write-downs or an increase in write-downs there.
Will a two-tier, or has a two-tier market become apparent in Europe, Georg, especially in light of the stress tests?
Definitely. The tiering between the better banks and the worst banks is, I think, it's still increasing. We have seen some banks, lucky and fortunate enough over the past few days, to raise fresh money in the institutional market, something which would have been impossible probably in April and May and parts of June. So therefore some big banks are now able to not only raise money, but also they raise money at spreads which are definitely on a declining trend. Other banks are still shut out from the wholesale market, and that tiering in terms of ability to refinance yourself is still very pronounced. And there is another tiering, of course, an underlying one, which is the asset quality tiering. So the European banking system is many banking systems.
It is.
At the moment.
Explain to me the wholesale banking market, Georg, because last Thursday, 3-month Euribor, highest since July 2009. On Friday, 3-month LIBOR fell the most in 11 months. What's going on in wholesale?
Quite a few anomalies at the moment, and we shouldn't forget, and it's time to mention that the ECB, of course, is a big provider of liquidity at the moment to some banks, and apparently more than half of the wholesale funding of Spanish cajas is coming from the ECB, for example, and you can take similar assumptions for Ireland. So therefore that distortion affects the market quite significantly. Also, we should not forget that at the current low level of short-term rates, things can look optically quite distorted, even though if you take a step back and look at them in absolute ways.
They're nothing like they were a couple of years ago, were they? In the height of the
So it's not quite as distressed as it may seem to tell you from the differentials you just referred to.
Georg, thanks for joining us. Georg Grodzki there from Legal and General Investment Management.